Hello everybody, I'm John with JP Strategic Investments, and today I'm going to give you my predictions for Rocket Company's Q1 earnings report that we're going to get next week on May 5th. As always, if you find videos like this helpful, don't forget to like and subscribe, and with that out of the way, let's dive right in. So I'm trying out a little bit of a new video format here. You guys are actually seeing me on camera, so let me know what you guys think of this, if you'd rather me go back to the old kind of more slide-driven format for the video, or if you like this one better. I also have it with the background like this. Not sure how I like it, a little cheesy in my opinion, but let me know what you guys think in the comments below. If you like this video format better, if you like it without the background like this, or with the background, and I'll see how I want to do this going forward. But for now, we're just going to go with this. We're going to get into some of these refinance statistics here. So if you look at the refinance data for the latest or the most up-to-date we have is pretty much like mid-February right now. As far as Black Knight, this is Black Knight's mortgage report. So you can see the eligible or highly qualified or high quality, like they say down here, high quality refinance candidates are kind of starting to taper off towards the beginning of March, end of February, beginning of March here, just based on the rise in interest rates. Kind of how they qualify a high quality candidate is basically somebody who is able to shave off, I believe, more than 0.75% of their rate. So, if somebody has a current rate of 4%, if they can get that down to 3.25, that's a high quality candidate. So starting to taper off there. So obviously, we all know refinances a big part of Rocket's business. Not completely reliant on refinances, but we have to concede that there is a large part of their business that is refinances. And you can see that this dip in high quality candidates is directly inversely correlated to the rise in interest rates. Now if we go down here a little bit, we get a little more information. So refinance rate locks versus 30-year interest rates here. So we have the refinance rate locks. If we look down here, says that first half of February was up 6% month over month, but January was down. So we're probably going to see pretty similar refinance rates, in my opinion, as we did, not refinance rates as far as the interest rate, but refinance volume, if you will. We're probably, in my opinion, going to see pretty similar volume that we did even in the last quarter. Even though if we look at rates, rates they have been rising. So if we look at the last quarter was October through December. So the average rate here was well under 3%. You're talking probably around 2.7, 2.8, the average for this entire quarter. Whereas this quarter, it stayed kind of around there for the first half, but then pretty much late February and March, it was just climbing, right? Finished off the quarter around 3.18% there, 3.2% or so. So definitely higher rates. This data here from Black Knight, as I said, it only accounts for about mid-February. And as they do say here, however, interest rates have in 30-year rates recent increases in 30-year rates threaten continued strength in coming weeks for refinance-related locks expected, and they're expected to suffer. So, what they're saying is, hey, this could happen, and it did happen, right? So this is what kind of makes me hesitate. Maybe we could see some lower refinance numbers than we have in the last couple quarters. Now, one thing that you could get, you could kind of get like a FOMO effect, right? Where people are like, oh shoot, I've been really meaning to refinance, and now rates are starting to go back up. Let me try and jump in before they go up too high. So we could get that as well. I would imagine we'll see pretty similar, if not maybe a little bit lower numbers on the refinance data. But one thing you have to keep in mind is housing prices are still going up, right? So even if you have slightly less volume for refinances, if those loans are larger loans, then Rocket could kind of make up some of that loss in volume on the refinances with the amount that they're refinancing, right? Because they do measure the total net rate lock volume and net closed loan volume as a dollar amount, right? Because they get a certain percentage of that loan. So, if they're closing less loans, but the loans are larger, then that could kind of even out right there, and it could kind of make up for some of that loss. So that is one thing we have to take into account. Just from the data that I'm seeing, I think we're going to get pretty much the same as we did last year, maybe a little bit lower on the volume. And if you look at Rocket's guidance, that's actually kind of what they're guiding. So use the very top of their guidance. If they were able to get this 103 billion and they were able to achieve a 3.9% gain on sales margin, that would give them right about $4 billion in revenue. So, a decent drop. Now, analysts are expecting a decent drop, right? So if we take a look at the analysts, they are expecting, right, pretty much around what I said, of a $4 billion revenue number, and a 90 cents per share for the EPS, right? Which is pretty much what you would kind of expect based on their last numbers from this revenue. Now, that there could be kind of, if there's any significant changes in, for example, their AMROC segment, their auto segment, stuff like that, that could obviously contribute to a nice beat there, right? But, for these predictions, I'm not going to kind of bake in any of those numbers. But what this does tell us, though, is if they're looking at $4 billion and they're looking at the 90 cents in net income, they're pretty much going off of Rocket's high end on their guidance here. Okay, they're expecting Rocket to hit the high end of their guidance. So there are high expectations for Rocket's earnings report, this earnings report. So, that's, if they beat the high expectations, that's a really good thing, right? But because there are high expectations, that does make it a little more likely that they could miss expectations for this earnings report. And so, we have to kind of keep that in the back of our head here. If they get below here, if they get the low end of their guidance, that could definitely be a pretty big miss. Now, Rocket does tend to give fairly conservative guidance, just if we look at their last earnings report. So I would imagine they'll probably be able to hit this this high end of their guidance. If I had to guess, maybe this will come in right in line with guidance, maybe a little bit lower. But I would imagine they'll actually be able to achieve a little bit higher than 3.9% on the gain on sales margin, mainly just due to their last earnings reports, along with those guidance or the guidance they gave for each one. The guidance they gave for their last earnings report, I believe, was even the high end of their guidance was maybe right around 4% or 3.9%, and they actually were able to achieve that 4.4% gain on sales margin. So I think this estimate for gain on sales margin is fairly conservative. I think this was also probably conservative, but again, with this rise, this spike in rates through the month of March, that's going to be something that's going to be hard to really kind of make predictions on how that's going to affect the amount of refinances that they're doing. Now, I've made videos on this before as far as the rising interest rates. Long term, it's really not going to have an effect on Rocket's business. And if you're hesitant on that, I recommend you watch the video that I did on how dependent they are on interest rates, or how reliant they are on interest rates. And really, it's not that much. So long term, probably not going to have much of an effect on their business. So if we do get some weakness here in the refinance numbers, and the stock does drop as a result of that, if you're in the stock for long term, that actually could be a nice buying opportunity there, because long term, this is actually going to help them pick up even more and more market share and set them up nicely for the long term. And speaking of market share, if you guys remember, we had this ultimatum from UWM. That's going to be something that's probably going to come up in the earnings call. Now, keep in mind that this ultimatum happened, the ultimatum was actually set for like mid-March, like March 15th. So as far as the numbers that it's going to affect on the earnings report, it probably won't affect this earnings report too much, if at all, because if it were to affect anything, it would be just the last 2 weeks of that quarter. It's most likely going to affect the next quarter. And one of the things that I wanted to show you guys in this article, Rocket, if you guys remember, if you saw all these tweets, I did a video on this as well. You can check that out. I'll put an info card for that as well. But after the ultimatum, they were getting so many calls from brokers, or they said they were getting so many calls from brokers, right? They have all these quotes that they were tweeting out on the Rocket Pro TPO Twitter. So you guys can go check those out. But basically, it seemed like this ultimatum was going to give, it kind of backfired on UWM. It was going to give Rocket a huge amount of market share. And I guess Fairway was actually experiencing a similar thing. It says we typically had 1 or 2 inquiries a week from the broker channel. This is the CEO talking, and he was saying we're up to over 100 inquiries since March 4th, and that was March 24th. So went from basically like 1 to 2 per day to like 5 per day. So that's something significant. And he also did make a comment as well down here, and basically saying what the other brokers were saying is that basically UWM in this agreement with the brokers who actually were going to sign the agreement says that if you lock in a loan with UWM, so he says it right here. However, there's a clause in those 19 pages that says if you lock in a loan with UWM, let's say you lock it in at 3.5%, and then rates drop to 3.125%, they're saying you have to close that loan with UWM. You can't go and say, oh, well, another mortgage originator or another business like Rocket or Fairway maybe might give you that 3.125%. And you can't do that with the agreement. And he says here, as a broker, the freedom and flexibility is key. He says, as an originator who would never sign that document, you might as well just work for UWM at that point, which it's true, right? The brokers are their whole, value proposition is that they can shop around for you and get you the best rates. Well, if you limit their ability to shop around, then there's really no point in being a broker. You might as well just work for UWM at that point, as a broker specifically for them, which is kind of what anybody who signed the agreements are doing. So it was interesting, I thought, just that he gave some comments that were very similar to what some of the brokers were saying. On top of that, I tweeted this out actually a few days ago. Some of you may have seen this. There's actually a class action lawsuit from some brokers in Florida. They don't give exact numbers on how many brokerage firms are in this lawsuit, but basically there's a class action lawsuit against UWM for that ultimatum, saying basically it's violating anti-competitive laws. So, if you guys have probably heard of the Sherman Antitrust Act, basically, laws relating to competition in the workplace, similar to monopolies and stuff like that. There's a bunch of other kind of things that you can't do within business. I don't know if they really have a case here because, a business kind of has the right to set whatever requirements or contracts that they want to. I'm not a lawyer, so I'm not going to make any, predictions on whether they're going to win that lawsuit. But it's just if anything, more bad press for UWM. So the main thing that I'm going to be looking for on this earnings report, as I said, I think we're going to maybe hit the high end, maybe a little less than the high end of the guidance here. I think gain on sales margins could come in a little higher than that. But the main thing that I'm going to be looking for is their guidance, because if they're benefiting as much as they're kind of implying and saying that they're benefiting from this ultimatum from UWM, then we should see that reflected in their guidance for the next quarter, right? We should see, hey, this is how we're going to benefit and this is how much money it's going to make, right? We also have UWM reporting earnings, I believe, next week on May, not this coming week, but the week after on May 10th. So we'll get to see what they see or what they say in their earnings report. And so we'll see if there, there's competing stories there. Oh, we're benefiting. No, we're benefiting. We'll see how that goes. But really going to be looking at that guidance, how they're going to be benefiting from that ultimatum, as well as, how they see interest rates affecting some of their business going forward. Because, this could be this next, 6 to 9 months for Rocket. We could see some rising interest rates, and if a lot of people think that's going to be weakness for Rocket, and maybe it will be in the short term, then we could see Rocket dip below the $20 mark again and present some really nice buying opportunities for anybody who is kind of bullish on this stock for the long term, and thinks that, as I do, that they're probably going to only gain market share from here on out, at least in the next 3 to 5 years, especially if rates start rising. So while it may not be good for them if rates rise in the short term, just specifically from a revenue and an earnings standpoint, from a market share standpoint and setting them up for success in the long term, I think rising interest rates are just going to do that. As far as a dividend goes, I don't imagine they'll announce another dividend, especially with rates starting to rise. They'll probably want to put some cash aside on the balance sheet to make any acquisitions or make any moves if they want to during those rising rates. So we'll see what they do there, but I don't imagine they'll do a dividend this quarter. So basically, looking at revenue probably coming in at the high end, maybe a little lower than the high end of guidance. Gain on sales margins, I'm expecting a little bit more, maybe around 4% or so. But really looking at that guidance, how that ultimatum is really going to benefit them, and what they see for mortgages and refinances going forward. So that's what I think. Let me know in the comments below if you have any questions. Let me know what you're looking for in Rocket's earnings. And as always, if you enjoy videos like this, if you find them helpful, please consider liking and subscribing. Other than that, have a great day, everybody. I'll see you next time.